Hi, welcome to the NFT Finance Podcast, Market Updates Edition, where we provide you an updated view on the recent developments in NFT finance. I'm Helmas, and today we're joined by Christoph and Ethan with Goblin Sachs. Hey guys, when we jump in, can you just provide us some quick intros?
Absolutely, yeah. Oh yeah, should I go first?
Go for it.
I'm Ethan from Goblin Sachs. I work mostly on the tech side, but also do a little bit of portfolio management and watching the markets.
And I'm Christoph. I work on the strategy side and keep an eye on our lending performance and the overall lending markets.
Awesome. Thanks for jumping in. Let's kind of like get right into it. This is the Market Update Edition, and I think it's, going to be where we talk about news going on in NFT finance. Is there anything interesting that you guys saw this week more broadly?
This week, I think, has been a continuation of the past month where in January, you really saw a surge in borrowing activity, which pushed up APRs, pushed down LTVs, and really was just sort of a lender's market. And February has sort of just been that trend reversing a little bit, not in a super extreme way, but APRs have come down over the past month, and that trend has continued a bit this week. LTVs have gone up, and seems like we're stabilizing into a bit of a borrower's market.
And I'll just add to that more broadly. I think one of the interesting things is seeing negative interest rates over at BendDAO. So borrowers are being paid to borrow at the moment, which is, maybe having an effect on the broader lending markets. And then I think also there's been a lot more attention on NFT finance and NFT infrastructure with things like the SudoSwap and Blur airdrops happening recently, NFT perp sort of doing good volume. And I think it's bringing quite a lot of interest to the space in general.
Yeah, so maybe let's expand a little bit on, I know the Blur airdrop was, front and center on everyone's radar this week. How did it impact NFT finance more broadly?
I think general attention, in this whole space, everything's driven by attention and narratives. So I wonder if that's just made people more aware of NFT finance and have been looking at other things that are going on in the space. But in the NFT markets, generally, there's been a lot of talk about, the bidding incentives on Blur sort of pumping NFT markets and setting quite thick floors. So I guess they're the main things that I've seen in that.
We've also wondered whether some of the borrowing activity last month was motivated by trying to farm Blur airdrops. I know some people we're familiar with in the ecosystem were quite successful in that. And it seems like Blur might have provided a temporary just bump in liquidity in the market from people realizing there was going to be this big airdrop and wanting to get in on that. It seems like that's coming. Now that happens, that might be part of this cooling off in demand for capital in the NFT finance space.
Yeah, that's an interesting point. And I guess now that this, that the airdrop was announced, it seems like a lot of capital has been deployed back into NFTs more broadly. So, I saw somewhere that, Franklin had purchased another 10 or so apes with the airdrop received on Blur. Curious if you guys have seen any really impacts to just secondary market metrics. So floor prices going up across the collections that you guys track. Has there been any like movement in floors? Anything to note like on marketplace metrics?
Overall, I don't believe that there's been any big directional shifts in floor price. It looks like apes are about took a little bit of a dip and now are like just about flat over the past week, but up for the month. Punks are pretty stable. And then like second tier assets have been roughly the same trend. It's a coin toss whether they're up or down, but not a huge move in floor price, which is the main metric that we track.
Interesting. And I would have expected to see, the floor price like increase a little bit on some of these assets, but I guess it is. I'm trying to think if there's any notable like NFT drops this week, and I there's none that really come to my head, and I'm probably missing, a few, but curious, do you think just given like, what's occurred recently with this airdrop, do you think capital flows maybe into BendDAO, given that there's like an incentive? Christoph, you mentioned there's like negative rates there. I don't know if that's still the case. I think it was like a week or so ago. Do you think capital flows there, given that, they're incentivizing through their token, borrowing?
Yeah, I think, well, if you're a borrower for the assets that you can borrow against on there, I think it's the obvious choice. How that plays out long term, I'm not really sure, but the tokens really had a bit of a run up recently, and they don't really actively adjust the emissions on either the borrower or lending side. But I mean, it could be good or bad for them as a protocol. Like Ethan said, they've had quite low utilization on their pool, and this could sort of drive up the number of borrowers and get a bit higher utilization. Equally, it could just cause a lot of selling pressure on the token and be bad long term. But from a borrower's perspective, it's definitely the best place to borrow from at the moment. And we also see JPEG. If you're just borrowing to farm, then that's quite attractive as a borrower because they have really, really high APR on their sort of curve and convex pools. So if you're just farming, they're probably where most borrowers are going to go.
Yeah, I'd say as a short, I don't know. If you go with one of these pools, you're generally taking a risk of liquidation, which is in a volatile market, a pretty significant cost. But for whatever reason, capital contributors to pools are accepting very low utilization and very low APRs. And I think these incentive schemes are a part of that. So the state of those seems a little bit unsustainable to me, especially the negative interest rates. So I would my view is if you're looking to borrow and you're doing it at a conservative LTV and there's and you think there's very little risk of default, you can certainly get very cheap capital that way when you factor in the incentives they offer. But I'm not sure how long that will last and how stable that system is.
What do you guys think are some of the catalysts, I guess, to bring more borrowers in the space? Because I guess, so you were you were kind of mentioning that, like, lending is now like in favor of kind of like the borrowers this month. And have you guys noticed like a notable uptick in like unique borrowers? Is like volume up just kind of like across the board in peer-to-peer, or just in the market more broadly? And then like what do you guys think drives kind of like the next wave of borrowers into the space?
So it's actually the opposite. Borrowing volume is down. I don't look a ton at unique borrowers, but the amount of borrowing in the ecosystem has gone down month over month, as APRs have gone down over month. So I don't know, because it seems like borrowers aren't super responsive to financials at the moment. A long-term idea I sort of held was that as APRs come down, as it becomes more of a borrower's market, borrowers would enter the ecosystem and borrowing volume would increase. But we're actually not seeing a lot of borrowers respond to that, which makes me think there's probably just basically a fixed pool of borrowers who are in the know and interested in doing this sort of thing. And they respond to similar like time incentives about when they want to borrow and when they don't want to borrow. So I think the thing that's really going to move the needle and increase total borrowing volumes in a sustained way is probably like podcasts like this one, and really just like education of NFT holders that they can get access to capital this way.
So maybe it's
yeah,
that's really interesting actually, because if rates do go down, you would expect there to be more borrowers coming in, right? And I guess so. Like the market today is more, I guess, categorizes like an events-driven type market, where people are going to borrow around events that maybe you need leverage. Taxable events, where hedging may make sense. But really, like, to me, I guess it seems the next wave of borrowers, it seems like it may be more of like an education gap where there's just, zero basis for the next, like the starting point, I guess, is unclear for this like next wave of borrowers. And it really needs to be a focus effort around education to bring those people in.
And I'd also say a thing that might do it would be these periodic fiascos over lending events, which is sort of happening right now with fingerprints. A group realized that you could get fingerprints loans for extremely high LTVs, unreasonably high LTVs. Acquired a bunch and are basically using them for like exit liquidity at this point. And I think that people have been talking about that a bit on Twitter. And yeah, it's going to be interesting to see how that plays out with like the price of fingerprints and things like that. Right now, I think there's over 200 defaulted loans sitting in escrow on Nifty Fi. And yeah, so there's like those are going to come to market eventually.
Were you meaning friendship bracelets?
Oh yeah, sorry. What did I say?
You said fingerprints, but I think friendship bracelets. Yeah.
Please edit that out then.
No, it's fine.
Okay, yeah, sorry.
But yeah, friendship bracelets. Interesting.
Yeah, friendship bracelets is like I think that's going to affect the ecosystem. A lot of people are going to make a lot of money on friendship bracelets. A lot of people are going to lose a lot of money on friendship bracelets. And like those sort of events where you see people like cleverly utilizing these markets to gain like significant like margins on individual trades, I think might make news and draw more people into the ecosystem. Same way the events that happened with Bend, DAO, and Franklin did a little while ago. And also some of the like larger liquidations that we've sometimes Goblin Sachs has been a part of have gotten attention on Twitter as well.
And I think just to add to that, there's still this open question of why people are actually borrowing against NFTs. Is it for leverage or real world spending? And I think as more lending products come to market and more flexible ways to repay and things like that, then we'll see more usage as people can do more useful things with their loans.
Awesome, guys. Any final words for this week?
Nope.
Not on my end.
All right. Appreciate it, guys.
Yeah, thanks,
Cheers.
Ryan.
All right, bye.
See you.
Follow me on Twitter. I'm 0xTayTayHoho on Twitter. That's Tay with an E. And you can follow Ryan at _Helmus.
Yeah, and that's _HELMASS. Thanks everyone for tuning in, and we'll catch you soon.